Welcome back. Today, we're going to be discussing the gift tax. My name is Adam Lasowski. Welcome to the 3-Minute Advisor. Let's start the clock. Did you know that if you give someone, even a direct family member, an amount above a certain threshold during a year, you might be required to report that to the IRS? If you didn't know, don't worry, you're not alone. A lot of people don't. Today, we're going to change that. Let's get started. The IRS defines a gift as a transfer to someone or an organization where full consideration is not received back in return. Now, if you give an amount above a certain threshold, which we'll cover here shortly, you might owe tax on that. A couple of exclusions do apply to this, and most notably if you give money to a spouse or an item of value. However, if you give money, say for instance, to your children, and it's above that amount, you could wind up owing tax on it. In order to avoid any tax liability on a gift, it has to fall under the annual exclusion amount. In 2020, this is $15,000 that each donor can give to a single donee. Now, the language here is important because it says that both you and your spouse could each give $15,000 to a child, for instance. And if you have multiple children, both you and your spouse could each give $15,000 to each of your children, which does make avoiding that liability a little bit easier. Now, this is the beginning of where it may get a little confusing. If you do give a gift that's in excess of that annual gift exclusion amount, you're required to file a Form 709, which is an annual gift tax return. Now, gift tax rates vary, ranging between 18 to 40% of that gift that you might wind up owing, but there's a very important catch. In 2020, every person is allowed a lifetime exclusion amount of over $11.5 million. That means if you do find yourself giving beyond that annual exclusion amount, you can file that Form 709 and claim any excess against that lifetime exclusion. Now, that lifetime exclusion number, that gets factored into your estate taxes when you pass away, and that determines how much estate tax you're going to pay when your assets pass on to your heirs. Now, it's pretty confusing, and if you find yourself giving above that annual exclusion amount, it's usually a good time to get a professional taxpayer involved, or at the very least, somebody that can help guide you with professional advice. I think you can do this, but if you can't, reach out, let us know. We're happy to help. Thanks for watching.